Hey guys, welcome back to the channel. In this video, I'll be going over my end of month portfolio, going over how much dividend distributions I made, as well as going over some market news. As always, don't forget to smash that like button and share this video if you like this type of content so the algorithm gods know that I'm here. Hit subscribe if you're new so you're alerted every time I publish a new video about stocks, investing, finance, and news. But before I get started, like every other time, a quick disclaimer, none of this is financial advice and you should always consult a licensed professional. With that out of the way, guys, let's get into it. All right, so let's hop over to the portfolio. So for the week, all right, closing out, I am up 15.49%. So it is nice to see that the market is recovering. But again, I think that we're still due for some choppiness. I think we might chop a little bit to the downside. Probably next week, things are going to get a little more spicy heading into the Federal Reserve meeting coming December 10th. So there's still a lot of stuff coming out. Again, keep an eye out on the market news, keep an eye out on the economic data, because I think that is really what's going to drive the Fed rate decision. But we're sitting at about almost close to a 90% chance that there will be a rate cut. Now for the month, all right, I'm still down close to 25%. All right. So I still have a ways to recover. But I predict once, the crypto markets start to recover, once the, high beta names, the AI stocks, once those start to recover to their all-time highs, this portfolio will be definitely in the green and definitely looking a little more better. All right. So I'm still very bullish on the whole AI thesis and the whole, AI super cycle, as well as, the Ethereum and crypto super cycle. So still bullish there. Anyways, guys, we're here to see how much dividend distributions I made. So let's get started. All right, so for Wpay, this one has been making its rounds across YouTube. So I'm going to be covering how much dividend distributions I have. I use Snowball Analytics because it gives you guys, the viewers, the audience, a full transparent look at all of my holdings, all right? Because I get a lot of questions about, is there NAV erosion? Is there this? How many shares? How much this? So I just show you guys full transparency using Snowball Analytics. All right, so here we go. So you guys can see Wpay had a really, really bad drop, okay? And it looks like we're starting to recover, all right? It looks like we're starting to recover. I still have plans in the future to probably trim this once I fully recover, once my position fully recovers. How much of a trim it will be, I have not decided. I'm actually kind of contemplating that myself. So stay tuned for this, all right? But Wpay does look like it is starting to recover. Remember, it has a lot of the high beta names in there, a lot of the momentum players. It also has leverage. So you're going to see those spikes like we have seen whenever the S&P goes up, but we're also going to see a really massive dip whenever that happens. All right. So moving on, here are my position metrics. As you guys can see from a capital gain perspective, I'm still down about 13.4%, but when you factor in the dividends received, I'm actually only down about 7%. So it's not too bad there. And again, I'm expecting the market to recover well into December, and hopefully we reach new all-time highs. So I expect Wpay to, kind of recover all the lost ground that we have. All right, I have about 1,778 shares of this ETF. All right, scrolling down, we can see the dividends received. I haven't done a dividend update video in quite some time, so I'm just kind of rolling it all up in here. But we have for November 5th, 984 dividend distribution. On the 13th, 994. On the 19th, 692. This is during all the dip that was happening. And then on the 26th, 775 in dividend distribution. So not bad, all right? So this has actually been a pretty decent payer, all things considered. All right. So moving on, we have Xpay. All right. So Xpay is a cover call ETF for the S&P 500. It is a vanilla cover call ETF. There's no thrills or frills about this ETF. As you guys can see, I think it's been pretty stable. I really like it compared to XDTE. XDTE was, not even close to what Xpay is. And there's two different strategies. XDTE was, a zero DT cover call play versus Xpay, which is, long out of the money cover call play. So a lot of people refer to this as kind of the poor man's cover call strategy. But it has actually been keeping up very well with the S&P 500. So I really do like Xpay. I intend to keep it for at least the immediate future. I don't know, if in the future, if we go through a huge bear market, what will happen to this ETF. As you guys can see, I held this all the way through Liberation Day, and it did recover. It took some time, but it did recover eventually. So I do like Xpay quite a bit. All right, scrolling down, here are my metrics. All right, 1,625 shares of this ETF. As you guys can see, I am slightly down on this ETF by 4 basis points. But when you factor in the dividends received, I'm actually up 11.9%. So I will take that. For the month, for this month, for November, 1,458 in dividend distributions. So I like that quite a bit. All right, moving on, we have the Roundhill Palantir ETF, and scrolling down, you guys can see this mark right here, this bright orange dot. That was right when I sold this ETF. All right. There's a lot of indicators going off, a lot of chatter in the community. There was just a lot of stuff happening that was basically pointing to a larger dip. So that is when I sold out of Pltw. All right. So and you guys can see not too long, or not that much longer later, I ended up buying back in. All right. So again, I really do like Palantir. Palantir is a great company. I'm bullish on Palantir, and I really do think that it's going to be one of the best companies in the future. Right. It'll probably, hopefully, maybe even kick off one of the Mag 7s. Right. Just dislodge it. But we'll see. It is a very richly overvalued company. Left to be seen, how many more contracts it can secure, how much more commercial adoption it can make. But again, I really do like Palantir. All right, scrolling down, here are the metrics. As you guys can see, I only have 358 shares from, I think the previous amount was closer to 1,200. So I'm slowly adding back in, but I don't think I will be adding a full amount like I had last time, because I believe I had a huge position in this, and I was, kind of over my allocation limit, and I just kept adding to it. So what I intend to do is do it a little different this time. I think what I'm going to do is still add to it, but it's going to be at a more of a reduced amount. And the reason is because I follow the core satellite approach, and I want to make sure that my higher beta names are not overexposing this whole portfolio. All right. That is really the biggest reason here. I mentioned it a couple of times in my previous videos that I'm moving a bulk of the portfolio back to growth, simple index funds, things like VGT, because these high beta names, especially these funds, these high yield funds, there's just a lot of risk that comes with these. And especially when you add in leverage, yes, leverage is nice on the upside when it's going up, but on the downside, especially being a high beta name like Palantir, you can have these really wild swings, and that can factor into the volatility drag. So again, just something to think about. So anyways, moving on, we have a total return so far of 10%, right? So not too bad. But when we talk about total return, when we factor in the dividends, I'm up quite a bit, actually, quite a bit. So dividends received, 22,000 in dividend distributions. All right, scrolling down again, just like last time, because I sold out, so there's about a week of missing data. So for November 4th, it was 824 in dividend distributions. 11th, 999. On the 25th, just a paltry 156. So, hey, I'm building it back up. I don't know how much it'll be in the next, couple of weeks, but I am building it back up. So we'll see. All right. But hey, I'll take that. All right. That's a week. That's on a week. All right. So I will take that. All right. Moving on, guys. We have the Nvidia Roundhill ETF. All right. Scrolling down, you guys can see just on a complete performance, it has just been killing it, right? Absolutely killing it again. Very bullish on Nvidia. They are, Dan Ives refers to Nvidia, Jensen Huang, as the godfather of AI. They've been taking a little bit of flack here and there. Not going to lie, they've been taking a little bit of flack because of, you have Google talking about creating their own, TPUs that are going to, compete with Nvidia. I think the market has it completely wrong, but again, that's just my thoughts. All right, scrolling down here. So for the metrics, I only have 285 shares of this ETF. All right, for capital gain, I'm actually down quite a bit. Well, not quite a bit, but I am down 2.2%. For a total return, I'm up 23.9%. And then when you factor in the dividend distributions, right, that's what gets me a better total return. All right, scrolling down again, just like the other ETFs, because I did sell out of this, for quite a while, or for about a week and change. So for November 4th, 561 in dividend distributions, 11/11, 678 in dividend distributions, and then 11/25, 121. Again, paltry dividend return, just like PLTW. All right, scrolling over, we have the most unloved child here of the bunch. We have the MSTR from Roundhill MSTW, okay? Scrolling down, you guys can see it has just been getting hammered and continues to get hammered. But there's a lot of talks right now, for anyone who is, bullish on MSTR, that we have finally reached support. We can finally probably see a bounce from here. Okay, so there's a lot of, I guess, talk or chatter in the MSTR space that this is really the bottom. I don't know if it can go lower. There's some bears out there that say this thing can probably go sub $100. I have no idea. But, I think I'm still very bullish on MSTR. As you guys can see, JP Morgan came out with a whole thing saying that they're going to be creating this, product. But right before this Bitcoin product, but right before that, they talked about MSTR getting delisted. It was definitely an inside job, in my opinion. They were doing this to spark more fear about MSTR because MSTR has all those products, all those Bitcoin-backed products. And now JP Morgan is trying to come into the space and basically take out the biggest player, right? So I don't know, guys. Maybe it's a conspiracy. You guys tell me, but I'm still very bullish on the stock. I'm not getting out of it. All right. Just not financial advice, of course, but I'm not getting out of it. I am still very bullish on MSTR long term. All right. Their perpetuals were far ahead of its time. Okay. So looking at this, deep red, all right, blood red here. Okay, so we have a negative return of 64.8% in the red. When you factor in the dividend distributions, we're up, or well, we're actually still down, but only by 49%. All right, so again, I expect a bounce from here. I don't know how long it'll take, but I do expect that MSTR will recover at some point. This is getting kind of spicy because it's getting closer and closer to, like the $10 range. And I mean, that is scary for anyone holding this ETF. I totally understand it. I get it. For me, I don't know. Maybe it's my conviction or my just stubbornness in MSTR that I just refuse to get out of it. But yeah, anyways, looking at November, we have November 4th, we had a 616 distribution, dividend distribution for 11/11, 454, 11/18, 381, and then for 11/25, 242. So this was the lowest distribution by far this whole month. All right. So moving on, we have the Roundhill Robinhood ETF, HOOW. So let's take a look here. As you guys can see, again, being a high beta name, there's a lot of indicators flashing red for me. So that's when I decided to sell. And then I got back in, looks like I got in right at the bottom. So looking at this, Robinhood's doing really well. Again, I'm still very bullish on Robinhood. Scrolling down, here are the metrics. Okay, I only have 244 shares of this ETF. And when we're looking at the capital gain, I'm up 21%. They had a partnership, and I covered this in my last video, but they have a partnership to expand their prediction markets, which is a moneymaker for Robinhood. They have a 90% stake in MIA-DX, if I'm not mistaken. So really, really good, really bullish for Robinhood. Should be accretive for, obviously, shareholders, right? Anyways, looking at the total profit, total return, I'm up when you factor in the dividend distributions. I'm up 13.4%. All right, so awesome there. And then, of course, we're going to look at 1104. We have a 718 dividend distribution, 1111, 781, 1118, nothing, basically nothing, and then 1125, 161. So again, the smallest distribution I ever got from this ETF. But again, I'll be building up my positions back into these ETFs as soon as I reach certain levels. Anyways, how much did I actually make in dividend distributions for the entire month? Well, you guys can see it right here, 11,857, so very close to 12,000. But again, guys, you have to take a lot of these numbers because I know you guys see this right here, this next 12 months, right? 105,000, right? You have to take that with a grain of salt. Like that is whatever. That's like foo-foo money. It's not real, right? It's not real because these dividend distributions, they can change. They fluctuate week to week, all right? So you have to just keep that in mind. All right, but that is what it is for the month. Not bad. As you guys can see for the year since I started this, that is how much I was able to clear. But again, I reinvest a good bulk of this back into the portfolio. So all right, let's move on to some market news. All right, so we have the CNN Fear and Greed Index. All right, we are still in extreme fear, but we have been actually moving or trending up. So that is a good thing. Again, we were at like 6, on Friday, November, I think 21st or something like that. That Friday, we were at peak fear. I mean, this was peak doom and gloom. All the news out there, all the videos, all the articles was all talking about this market crash. There was no optimism, but now we're looking like we're recovering, and it shows in the S&P 500 up almost 4.5%. Okay, that is a huge move in the last couple of days. I mean, I don't think you guys understand how big of a bounce that really is, but that is a huge bounce. All right, you guys can see, we were from our all-time highs, we were down about 5%, and then now we're having this recovery up. This is a huge deal. All right, as you can see, it's a sharp rebound. There's some people out there, some bears, and I could see it, I guess, some some technical analysis being done saying that there is a potential for an even deeper, correction for this the S&P 500. Now, will it happen next week, the week after? No idea. I've heard and read and seen other people's videos saying that this could probably lead into 2026 where we have that deeper correction. Almost a 20% drawdown. I've covered videos from people like Mark Newton. We had Kathy Woods also talk about it, that this can happen. All right. And this can probably happen in 2026. So stay tuned. All right. Stay aware of what's going on. Make sure you're positioning yourself correctly. I know I am. I'm going to try to hold on to more cash than anything. But we also have gold futures posting a 5th straight day of gains with silver surging. All right. And there was all this, data center stuff with CME Group, not updating futures. And, it looked like, there was some talk out there in the Twitter space that this looks like straight up manipulation. I have no idea. But I will say that gold has actually been recovering quite nicely. As you guys can see from its all-time highs, it had a pullback, a really healthy pullback of almost 10%. So congratulations to anyone who did get into gold and open new gold positions. This is going to be probably one of my hedges in the future, definitely into 2026. I'm definitely going to be opening up some gold positions. I haven't decided what I want to do or how I want to do it yet, or what ETFs I'm looking at. I just haven't decided that much yet, but I am working on it. And once I do have an idea, I will release a video. We also had Oracle and Vantage in talks with lenders / banks for a $38 billion in debt to fund data centers, or $38 billion loan, basically, right? And this is crazy. This is absolutely wild because Oracle has already taken a huge hit because, they were releasing news that they basically are trying to raise more money, through the bond market. And people are saying that, Oracle is over leveraging itself, and that is not good, right? That is reminiscent of, the 2000 bubble pop, right? The 2000 technology bubble pop. You have a company like Oracle that is not really making a lot of their, a lot of the money or a lot of revenue to cover that. And, my thoughts just really at a high level is that technology, especially new stuff, data centers, it takes a lot of money to build a data center, right? But you have to be forward looking, right? For all tech stocks, you have to be forward looking. You have to be thinking what it can produce in the future. But that also creates, some bubblicious, valuations. But in Oracle's case, I don't know. I'm kind of torn on it. I am bullish on Oracle. I do like Oracle. I don't have a position in it, full disclosure. But I thought about opening a position in Oracle. I think it is a good company, and it's definitely going to have a big part in this whole AI, thesis over the next decade. But again, it's just, I haven't opened a position. Maybe in the future I might. Right now, honestly, it would probably be kind of worthwhile because if you look at its all-time highs, right here from its all-time highs, it's down about 40%, close to 40%. So, I mean, that is a really good, kind of discount if I wanted to open a position right now. All right. So anyways, guys, just wanted to cover that because again, data centers, companies are spending so much money on data centers. The data center demand, is predicted to be like a $3 trillion market in the future. I think if I'm not mistaken, don't quote me on that. But you need data centers in order to support artificial intelligence, the language learning models by all these hyperscalers, by all these companies that are, creating their own LLMs. data center demand is going to go through the roof, especially with power. Power, it takes a lot of copper, to run the wires. And then not only that, if you're looking a layer deep, for something like these data centers, you have companies like Lumen's technology that runs a lot of fiber, right? Fiber across, the United States. So they could also become very valuable. Again, I haven't covered Lumen's before, but Lumen's did partner with Palantir to help kind of restructure its whole company. And, they're going through basically a restructuring right now. They're cutting a lot of assets out, selling a bunch of stuff, and they're trying to focus strictly on the fiber stuff. So I think Lumen's technology will also probably start to pop up in the future. Again, not financial advice. All right, we had Bitcoin extending a rebound. This was the biggest news for me, in my opinion, the biggest news of the day. Bitcoin extends rebound from last week's sell-off. All right, we had a huge pump. All right, we went from like 86, and we had a huge spike all the way up to 93,000, if I'm not mistaken, 93,000 Bitcoin. And then we kind of sold off through the day before the weekend. So hopefully, Bitcoin is starting to attract, money back into the markets. Hopefully, investors are starting to get back into it. I think, again, Bitcoin could have a pullback. Again, there's a lot of, TA being done on this technical analysis. There's some still talks out there that Bitcoin could, go down to the 70s, probably 75 to 77,000. I don't know how true that is. You guys are probably smarter than me and would know better. I did add to my Bitcoin exposure, through IBIT. So I do like Bitcoin. I do like that it was at a nice discount. So I try to take advantage of that as much as possible. All right. So moving on, IBIT, speaking of IBIT, right, for the week for Bitcoin, we're up almost 7.25, right? 7.25, really good. Just good to see that Bitcoin is recovering. But again, I'm cautiously optimistic on Bitcoin into year's end. There's, you have people like Tom Lee saying that Bitcoin has its 10 best trading days a year. So we could see that into December. Who knows? All right. No one has a crystal ball. We also have BMNR. Okay. BMNR, Ethereum backed. It's an Ethereum treasury, a digital asset treasury that holds Ethereum. And Ethereum has also been pumping. So for the week for BMNR, we had a 20% gain. All right, so really excited to see that BMNR is starting to recover because Ethereum is, Bitmine is similar to basically MSTR. All right, this is for me, my Ethereum exposure to take advantage of that Ethereum super cycle. All right, guys, well, that'll do it for me. Hope you enjoyed the video. Hope you got some value from it. Hope you guys had a great Thanksgiving. All right, of course, and enjoy the weekend. Stay off Finance Land, stay off YouTube. I will see you guys in the next video. Take care.